Hello, everyone. We will get started very shortly. Hello, everyone. As mentioned, we'll in the chat, we'll get started very shortly. But can I just have a quick why in the chat room? Just let me know if you can hear me, okay? And also if you can see the shared screen. Okay, great. Fantastic. We'll get started in about 4 minutes. Thank you, Luca. Hi, Danny. How are you?
I'm good. I'm good. Thank you.
Fantastic, fantastic. We're going to get started in a couple of minutes. The clients can all see the shared screen; they can hear us. I guess, Danny, maybe just before we get going, it'd be great if you could just tell our audience a little bit about yourself and your role here at eToro.
Sure, definitely. So first of all, thank you very much, everyone who managed to take split time off to be with us here today. My name is Danny Brinker. I've been with eToro for the last 5.5 years. My role in eToro, I'm leading the investment portfolios offering in eToro. I see a comment about no audio, so I hope you can hear me, Sam, right?
Yeah, I can hear you. Yeah.
Perfect. So I hope that works well. So going back, I'm leading eToro's investment portfolios offering, where maybe the most recognized product that we have available on the platform today is the smart portfolios. In my background, I have experience in consulting firms and also a couple of startup ventures, so tech ventures that I've led together with partners of mine. Actually in various different industries. So one was in the field of social networking way back in 2010, in the early days where social networks only started sort of to take over our lives in a way. And I've been really enjoying my time here at eToro doing innovation and great products, hopefully, for our community to participate and invest in.
Yeah, well, it's great to have you here, and we've got a presentation which we'll go through. And I'd also like to invite everyone to feel free to ask questions in the Q&A. It's completely anonymous as well, and we'll have time to go through those at the end. I'll pick some of those out. The session is being recorded. You can watch it as many times as you want. I've actually just before we get going, I've got a poll for everyone. I feel it's like a good time just to get a gauge on people's, I guess, people's sentiment about the market. Again, it's completely anonymous. We're not going to call anyone out for having a certain view. So let us know. Have a little vote. It should all appear on your screens at home or in the office or wherever you are. The question is, how do you feel about markets right now? The options are, I think we go lower, I am unsure, I am super bullish, or I think they go sideways for a while. So we'll leave that up there for about another 10 seconds. Please do have a vote. Again, completely anonymous. We're not going to get the account managers to ring you up and say, why do you think this?
I
So,
actually think it would be interesting to have this as a question and a follow-up question. What do you think about tech markets
yeah, well, I
right
can
now? And then
absolutely.
it would be very interesting to see sort of how answers
Yeah,
diversify.
well, I can easily do that. I can create one. Right, let's just have a quick look, share those results. They should, again, all appear on your screen. 15% are lower, so I've got a bearish stance. 29% are unsure. Just 21% are super bullish. And then I'd say the winner there, 35% preferring sort of sideways for a while. Of course, we're sort of heading into summer now officially. I think in 3 days' time
Yeah.
it's going. But yeah, thank you everyone for getting involved in that. We can talk about that in a moment. But Danny, I guess we can kick this off by just sort of going
Yep.
through
Yep.
each of the slides.
Yeah, sure. So I'll say sort of just one sort of minute in advance. So the goal of what we are trying to do in my team and generally in eToro is, of course, to bring innovation and allow our community to have access to trading in general, but also advanced products. And the goal from my perspective every day when we come to the office is how can we facilitate best our clients with ideas that will allow them to react in real time to what's happening in market or what is their view on the market. And it can be in a very high level and it can be really niche. So for example, in our thematic offering in tech, we've managed to go into really niche sort of agendas. And it can be a more broader high level and regional approach that I'm interested in a specific region globally and so on. And as part of this sort of thought process, we're really keen on implementing investment offerings that include elements of capital protection into them. So this is during my time in eToro, this is our third go of a capital guaranteed product. The recent one was in October 2023. And because we're exploring, we're sort of always asking ourselves, how can we really touch base with what's happening in markets? And I think that the approach this time was really, of course, you asked this specific question in the poll for a reason, is to connect really specifically with what's really driving markets in the last couple of years, and this is it's tech. So you can really sort of limit it, and we hear so much of our analysts in local regions and our global macro strategist, Ben Leider, and we hear everyone discussing on tech from so many various aspects, whether it's sort of the Magnificent Sevens, or now it's Magnificent Four that driving the main indices, or is it something broader? Are there pure players, and so on and so on. But I think from a general perspective, and the poll shows it quite interestingly, is that we're at a point right now where there are sort of so many forces, dynamic forces active in the market right now, that bring us to a question: where is tech going to go from here in the next 1, 2 to 3 years or so? And for those investors who are sort of asking themselves this question at the moment, meaning until recently, looking at 2023, were really with a strong conviction that tech is going like in a one-way direction that is up. I think that more and more investors are currently asking themselves, okay, what's going on? Where are we going to? And I think that what we did is to try and build some sort of a trade idea to suit this kind of audience, people who are asking them this question. So briefly speaking, what is happening from our perspective? So I think that 2023 was expected to be a year, 2023 to 2024 was expected to be a year where everyone anticipated rate cuts. And rate cuts, of course, are if we clear sort of a lot of the noise around them, are a good driver for tech stocks. Generally, they drive capital into capital markets and specifically to stocks. So it's generally a good thing. However, with the sort of ongoing economical inputs and data that were being released, we see that over time, the anticipation for rate cuts is dramatically reduced. And I think that right now we are, give or take, with 2 projected cuts for the remaining of this year. Meaning that this driver specifically, which was really sort of supposed to push capital markets and specifically tech, is sort of on halt right now, and we don't really know what is going to be the plan over the course of a long term. We do see quite a high certainty in regards to the 2 projected cuts already in 2024. So this is sort of point number 1 that we see. Then we have quite a bit of geopolitical tension. So we have already for a while now the tensions between Russia and Ukraine. We have Middle East conflicts. We have a lot of sort of noise for now, and I hope remains that way, high level China, Taiwan. So there's sort of a lot of noise in the geopolitical sense. We're seeing a lot of uncertainty recently now from a political standpoint in Europe, for example. So there's really a lot going on in terms of uncertainty in a higher, broader geopolitical level. So this is sort of point number 2. And then point number 3, really deep diving into tech. So we see that I lost track how many times did the main indices and specifically tech indices broke their all-time highs in the last 12, 18, 6 months and so on. It's become already untrackable. So we're really seeing tech stock at all-time highs and main indices and all-time highs. And that is a question: what is going to happen next? I think that there are plenty of products for those who believe that we're just at a sort of the beginning point and let's let the horses run. But for those who are sort of in a conflict or think the opposite, but would like to keep certain upside potential, this is where we sort of put our eyes instead of them, or put ourselves in their shoes. And we created a product called Tactical Edge. And I think if we can skip like a couple of slides, this is again, we have here, yeah, exactly, to the product. So let's talk a bit about the product and try to understand what we did here. So essentially, what we allow here is a full capital protection for clients who invest in this product for a period of 2 years. So we'll go over the sort of the operational stages in a second. Let's sort of flow on the concept first. So clients who hold this product for a period of 2 years, we will allow them a participation in a smart portfolio that is called Big Tech. Big Tech is one of our legacy smart portfolios. It's a purely tech portfolio allocating 25 of the biggest names in tech on pretty basic metrics of quantitative sort of metrics around market cap, average daily volume of trading, and so on. And the portfolio has been outperforming the main benchmark, which is NASDAQ, year by year for basically since its inception. We're really proud and really confident in this portfolio and the way it has resulted. And we think that this is the best way to gain exposure for someone who's looking for, I would say, an exposure to tech that is somewhere between this discussion on Magnificent Seven to the wider, broader NASDAQ, and maybe losing the impact of the biggest participants in the general NASDAQ index. So basically, we would provide investors an exposure of up to 25% in the big tech smart portfolio. So whatever the big tech smart portfolio performance is, we will gain 25% of that. And we combined it together with a coupon paying, it's a coupon accumulating, but essentially a coupon-driven yield to maturity ETF. It's an iShares product called iBond. It's essentially a product that holds a wide basket of diversified fixed income assets. And essentially, the coupon together with this 25% allocation to big tech, the combination of them, is essentially your end performance at maturity. So again, so we touched on big tech, and we're going to give 25% of whatever big tech does to maturity. And we combined it with 3/4 of the basket to a coupon-based product. And the sort of the joint compensation, the joint performance of the two of them is the expected performance of this basket. And on top of this scenario, we added a capital guarantee. And if we skip to the next slide, we could have sort of dive in and explain through an actual scenario how the product should behave at maturity, or what are you expected to see when reaching maturity. So essentially, as an investor in this product, you'll have 3 end scenarios. And this is dependent on how the tech sector, and specifically the big tech portfolio, will perform at maturity. So the gray line that you see, the linear line, is essentially the performance of the big tech smart portfolio in 2 years from now, when the basket matures. And based on where it is, then you can place yourself on the blue line to understand exactly what will be your performance as an investor in this portfolio. Now, important to say that this is indicative numbers, because we have the yield to maturity coupon, which is still unknown. Only when we trade the actual positions, we know what is the expected yield to maturity and what will be the coupons. On top of that, the performance of the basket at maturity, and you'll be able to combine and understand what is your sort of tweaked end numbers. We do know indicative numbers that we can look at them in a second in an example that we prepared. So just to highlight, you can see point X and Y at the bottom. So let's say that we are on the left side of the X. So the performance of the big tech is lower than the X. The X is, we'll see in an example in a second, is plus minus 32% or so. So when this kicks in, your performance of the tactical edge smart portfolio will be negative, and the capital protection element will kick in, and eToro will reimburse you back to zero, essentially, to protect your initial invested capital. If you're in between point X to Y at maturity, it means that you are already on positive grounds. And again, if we will see an example in a second, but the X is deep negative. We're talking around roughly 32%. So anywhere between 32% and give or take 10% on the upside, you're outperforming the general tech market, so big tech in this specific case. And you're positioned very nicely, because even if the index or the underlying asset that we're tracking, which is the big tech smart portfolio, is negative, you're still in positive grounds. And then comes point number 3, which is on the right side of the Y point. So here in this case, we are starting to gradually underperform and disconnect from the total performance of the big tech, but we're still getting a pretty nice upside on the markets. So it will be always 25% of the total performance plus the element of the coupons. So essentially, what do we have here? we have a guaranteed product that is full capital protection in worse scenarios in sort of in tech industry and tech indices. We have a good sort of in between scenario of overperforming this total negativity in the middle zone, and you do have sort of, you give up on some upside if markets really drive strongly upwards. The next slide, we should have an example. So this is a scenario dated from end of April, where we took what was the yield to maturity of the coupon. And as you can see, so you can see that the X now is minus 32% and the Y point is 10%. And you can understand that if the big tech smart portfolio performance is below minus 32%, so the combination of the coupon and this negative performance will also bring you to a negative ground, and we will reimburse you and provide you with a capital protection. If they're in between minus 32 and 10, you're actually going to be in positive ground. So you can see on the table on the right side, so in a scenario where big tech is at minus 10, you're actually at just a bit roughly over 5% in terms of return. And then if we're going on the right, so it's the 10% mark, and then we're starting to disconnect a bit from the underlying tracking of the big tech smart portfolio. So for example, let's say big tech is up 30%, we will be at around 15.22, which you can see in the example below. So this is sort of the scenarios of what to expect. And again, it's really important to understand who is this sort of product for, in a way. If you're really bullish on markets and you have a very clear and educated view that it's a one-way ticket, then I think that this is maybe not a suitable product for you, in the same way that you wouldn't invest in I don't know, like a fixed income in that sense, or something which is really sort of conservative in that aspect. But I think that for any investor that has even a portion of sort of hesitance, or really thinks that we've about to be in a tipping point, then I think that this can be a good alternative to combine into a portfolio. It doesn't mean that you need to put all of your eggs in one basket as usual, and anything is risky. Every investment product is, of course, risky, and so on. But if you're looking a bit to diversify, how do you approach markets at the moment, you could really take benefit of this offering, and our really sort of intention to give clients with a nice approach to how to tackle this sort of volatile situation of market drivers that we have at the moment.
Yeah, thank you very much there.
I've been running. I hope if there are any questions, of course, also feel free to barge in. Okay, so we've added this slide just recently. It's a bit of a challenging slide, the concept here of showing back-tested results. The reason for that being is that the results of the big tech are very clear. It's a full equity portfolio, which is really easy to show its real historical performance, or to backtest it, of course. Here we try to do a combination historically with a similar yield to maturity product. However, we need to remember that going back to 2020, 2021, the yields, the interest rate levels were significantly lower. So you cannot really compare the coupon part of the existing offer and what it was in the past. So we've placed it here in order to allow clients to sort of understand how did it roll, but it's important not to ask yourself, okay, so 2020, the simulated result showed me 17.9, and markets did tremendously higher than that, you should sort of ask yourself if this combination, how would it behave. I remind you that we had very volatile periods in 2020 with COVID. So there are a lot of elements here. We did this slide in order sort of to support the bigger picture and to interpret it as you wish.
Yeah, absolutely. Let's go for our second poll. Should, again, all appear on your screen now. How do you feel about tech specifically? And obviously feel free in the chat to give a further explanation if you feel strongly one way or another. So the answer is bullish, neutral, bearish, which I spelt wrong, but hopefully you'll all be able to see. And
It's
just
alive.
while
It's a live live
yeah,
event, Sam.
exactly.
It's acceptable.
Yeah, I think I can be forgiven. There's also a question which I can answer in the chat. Just someone asking about the weekly webinars. Are they returning? Yes, they are very, very soon. So
Amazing.
yeah, they'll be back on Monday's usual time for an hour. Right, let's have a quick look at the results. I'll give it 5 seconds. Vote if you haven't. Again, you're not going to be called out. 5, 4, 3, 2, 1. End poll. Share result. 62% are bullish in the medium term. 30% neutral, maybe a little bit undecided, and 8% right now are happy to say
Already
that
bearish.
they're bearish, which is interesting.
So I think that the combination of this question with the question we had earlier is interesting
Yeah,
because essentially if we said that the general view on markets was the sort of in between, I would say, sort of a 50-50 if you combine all results together. But we do see sort of a strong bullish view. And the combination between the two is really interesting.
yeah,
And I think exactly sort of shows what we're trying to do with this product.
yeah.
You've opened the slide of terms and eligibility,
Yes.
which is, I'd love to run over it and also try to make things as clear as possible.
Mhm.
So the way this offering is going to work is that until the end of June, so plus minus 10 more business days or 9 or
Yeah,
10 business days left or so, you would be able to invest into this smart portfolio called Tactical Edge. And the registration ends on June 30th at midnight, so end of day of this month. And you're required to do mainly two things. One is to invest, and the second is to sign dedicated terms and conditions. You've been shared with this information via email, all through account managers. And if you haven't, then feel free to approach an account manager if required. I think it's even available on the feed of the actual product, or approach customer support, and we'll do everything we can to help you of course, read and evaluate the investment properly. So you need to sign the terms and conditions, and you need to invest into this portfolio. The minimum investment amount is $10,000, and there is an additional sort of restriction around the source of funds. The funds that we are accepting to this campaign are funds that were available in your balance in the end of April, so on April 30th, or you're of course allowed to deposit dedicated funds for the sake of this investment. The investment duration, you are expected to hold this product for a period of 2 years, so all the way to July 1st, 2026. And here it's important to say, everything in eToro is fully liquid. You can always close your investment. For
yeah,
whatever reason it is that you require the funds, or you don't like the product, or whatever it is, whatever it may be, you can always click close, and whenever markets are open for the relevant assets, the investment will liquidate and be released back to your balance. It's really a tremendous advanced offering compared with traditional baskets in capital markets where there is a lockup or a fine for early redemption and so on. So we don't have any of that. However, of course, and as you might guess, if you do an early redemption, you lose the capital guarantee from eToro. It means that
hmm
whatever the value of your investment is at the time you liquidate, it's yours. If it's gains or losses, whatever, you bear them. If eToro at the end would require to do a compensation, so the capital will be released to your main balance immediately, and the compensation is within a period of 30 days. This is sort of pretty much everything you need to know about it. So the three main things: sign dedicated terms and conditions, invest at least $10,000 with sort of specific source of funds element, and the third is hold it until the end. There is no fee or penalty on early redemption. As I said, you can liquidate at any time. I saw a question popping up just now, so I
yeah, yeah, yeah,
already referred to it. You can liquidate at any time, but whatever the P&L is at the time of redemption, you bear it. The
yeah.
capital guarantee is only available if you hold it to maturity.
Fantastic. Well, look, there's a few questions that I'm going to go through. One is in Italian, so I'm going to try and translate it. And Francesco, I'm sorry if this is completely wrong, but is it possible for users in Italy this offer? Yeah,
Yeah, yeah.
cool,
So the one, yes. So specifically for Italy, the answer is yes. It's available for users in Italy. It's available in most of our markets. There are a list of countries that are not eligible for it, and the main reason is that part of the allocation is holding UCITS, and they're not available in all countries, and therefore it's not supported. And you can see in the terms and condition the full list of non-eligible countries.
fantastic, cool. We got another question here. I am someone who believes the market is probably going to peak soon or already has. I'm not going to call them out. Would you think I'm suited to this portfolio?
So first of all, of course, I advise anyone who's interested to fully read and review and understand the product. And we try to do it with this guide. And there's also methodology available on the platform. And you have your account manager that you can discuss and understand better. So first of all, always evaluate and understand. I think that from sort of the background, the sort of the small bits of background that the question had in them, it sounds sort of exactly the type of view that we had on markets, or at least a scenario to prepare to in markets. We never try to determine where markets are headed. It's not in our crystal ball. When we bought it, did not include that feature, but we always try to prepare ourselves for any scenario. And I think generally, again, for clients who have a feeling that there might be a bit of a cool down, but still want to have that upside potential in their portfolio, but enjoy a really unique sort of capital protection to their investment, I think that this combination is really suitable. Yes.
Yeah, cool, cool. And I know we've mentioned this a couple of times. I think it's a good question to go through again. Just to confirm, if I am in profit after a year and I need the money, I could withdraw my funds and take the profit.
Yeah. So in any case, whatever your P&L would be at that
Yeah,
time. So I'd like actually to use this question to address two sort of
cool.
one to the question itself, but also reminding me. So first of all, during the lifetime of the product, the P&L that will be reflected is not necessarily sort of the real P&L, and that is because coupons are paid on a quarterly basis and they're accumulated and they're invested back into really liquid treasuries, for example, which we don't know their yield to maturity and so on. So essentially, as we get closer to the maturity, the picture will start to brighten up. So this is, first of all, important to understand. And in regards specifically to your question, whatever your P&L is when you need to withdraw your funds for whatever reason it may be, it's yours. If it's negative, then you'll bear a negative P&L. If it's positive, then it's yours as well. Yeah,
Cool.
pretty simple in that
Yeah,
sense.
no, thank you. Thanks for
Yeah.
the answer. Next question, we'll go through a couple more. We've got time. Thank you for the presentation. With this offer, I just want to clarify, there is no way we can lose money if we hold the investment until June the 30th, 2026.
Okay, sure. So basically, let's sort of be sensitive on the question. It's an
Yeah.
investment in capital markets. And as we've shown in the scenario, indeed, in a case of negative P&L, eToro will provide compensation for that P&L. So in that sense, and of course, it's important to note that you need to be eligible for the terms and the sort of
Yeah.
the requirements that we have. I will say that every investor that completes the required these terms and conditions and the adequate investment amount and so on, within a period of 2 to 3 days should receive a confirmation email and also a confirmation email at the end of the registration period. So if you don't see an email coming in, maybe worth checking in with your account manager or your spam inbox and so on. But again, yes, so to the question specifically, so yes, eToro will compensate, and essentially you leave with anything that you invested in the worst case scenario. I will say, and you will see it in the terms and conditions, there is always, as in any investment, as with any deposit in your bank and so on, there is the the power of God and nature and so on, which is of course none of us wants to be in these scenarios. So let's hope they're not happening. But to the specific question and to what we intend to do here and so on, then the answer is yes, your funds will be returned to.
Fantastic. Cool. We'll go for two more questions. The
Yep.
first one, can I add funds to my eToro account over the next few days and use that?
Yeah. So as we said, in terms of eligibility of the investment funds, so it's either available balance that you had on April 30, and again, if it was communicated in the campaign communication, so with every client, whatever he had, but you also, of course, can add funds and invest in this offering, definitely.
Fantastic. I'm going to combine two questions into one here using Costa's one. And essentially the question that I'm going to sort of mold together here is what was the logic that guided you when creating the combination of tactical edge?
So I think really it was, I would say like this, we're always looking to get better, and we're always looking to provide our clients with ideas that make sense and are reasonable to execute. With, of course, the limited capabilities that we have, and we're trying to expand them all the time. With this specifically was really looking for what might be a pain point, what might investors miss out or be delayed to react to. And I think that this is a question right now around tech markets in general. And don't get me wrong, it can be, I mean, reviewing NVIDIA and the results are unbelievable, and it makes so much sense. And I just heard the former CEO of Alphabet of Google saying that from his perspective, AI is underviewed and not already sort of so there's so much potential here, and I'm the first believer in technological revolution. I lecture on that, and I'm a true believer. But does it mean that the pace is going to be the same? Does it mean that capital markets are going to always be sort of aligned with the level of innovation that we're seeing that is being released to retail use or commercial use? So this is the view, essentially. If we're uncertain, even just for a bit, then you have this idea in combination, and you can combine it. You can have part of your portfolio going long on S&P and Nasdaq or other tech-oriented instruments, or one of our smart portfolios that are following thematics, and you can take a small portion of it and allocate into this and sort of create a mix of two approaches to really create a sort of more robust portfolio. So this is the view. Allow me just really, because I saw also a question popping up, which is a good one. Someone asked about the fees. So the portfolio trades equities and an ETF. So essentially, there are no management fees in smart portfolios in general. I don't think it's actually written here. There are no management fees when you generally invest in smart portfolios. There are the trading fees associated. So in the same fee structure that you would buy a stock by yourself in your account, you buy a stock as part of this smart portfolio, and you pay the fees associated with trading the required assets. In this case, it's equities, US equities, and a UCIT. So this is sort of the fee structure. There are no management fees around it or something on top of that you're missing out.
Amazing. Final question. I know we said we'd do the final question about 10 questions ago, but question here from Ting, which I imagine some people might have the same one. So I thought it'd be good to read out. Do I just buy it in the app and it's guaranteed, or do I have to sign a contract before buying it?
So it's important. One, you invest in the app or through the desktop as usual when you invest in a smart portfolio. experience is very simple. It's a sort of
Yeah.
one click amount and that's it. But in this case, we do require an additional acceptance of terms and conditions. It's an
Yeah.
online process, so it's a form that will either request you to fill in some personal information or with already have your personal, if it's sort of if you received it by email, so it's already a pre-prepared form. You have access there to the terms and conditions, and you just accept them, of course, if you're interested. So the combination of the two of them is the eligibility. And as I said, you should receive confirmation emails from every, so let's say you invested and
Yeah.
you signed, so around 48 to 72 hours after that, you
Cool.
should receive to your inbox a confirmation email. Last comment as well, you can invest in a few clicks, so you can add amounts if you wish and
Right.
so
Yeah.
on. That's also okay, and the email will update itself. So we receive, let's say I invested 20 and then I added another 10, so I'll
Yeah.
receive a new email confirming. So that is pretty much how it will work.
Amazing. Well, look, Danny, thank you so much for the presentation. I see in the feedback in the chat's been great, and obviously for all the clients, they can speak to their account managers whenever they want as well about this. The webinar that you've all watched, you can watch as many times as you want on the same link that you clicked on. But yeah, thank you for joining. We purposely put this around this time so no one had to miss any of the Euro 2024 games. So hopefully there's a few football fans out there that are grateful for that. But Danny, as always, thank you very much for joining.
Thank you very much, Sam, for taking the time, and everyone for joining. We hope it was helpful for you guys, and good day for the rest of you.
Yeah. Take care, everyone. Have a great rest of your Tuesday and rest of the week.
Thank you.